Epstein with your financial market wrap-up, and this wrap-up is for Thursday, May 8th, 2025, about 5:40 p.m. Central Time, and what an interesting day. We woke up, obviously, and the first news I heard was we're going to have an announcement from the president at 9 a.m. Central Time. Well, that came in about 40 minutes late. Started thinking about Biden, who was never on time. But then we got the word from the president that he had made a deal, and it's with the United Kingdom, England. And this was interesting. So I looked at the deal, and here's what it was. It's a framework. It's, to me, either a letter or a memorandum of understanding. It's not a finalized trade deal. They need to work through not negotiating the terms, the wording, and so on, they claim, to get it down on paper and signed in a couple of weeks. Both parties are going to act, this is what I heard the president alluding to, as though what's been agreed to will not be negotiated further as far as the memorandum, and that's what I'm going to call it, goes from what I saw. 10% tariffs will not be on everything. And while the president was joking and he said, there's no need for us to put a 10% tariff on a Rolls-Royce, that makes sense. They don't make them here in the United States, and you sell very few of them. But what about big, expensive Jaguars eventually? What about Aston Martins? I don't know, okay? I mean, those are made in the UK. So, in other words, it's going to be a little bit of leeway, and that's part of the framework. But what about Rolls-Royce engines for airplanes? You know, in the other deals that we had made with countries, we didn't put tariffs on airplane parts. So there's more to be talked about that will come out. I don't claim that I got everything, and maybe I've got some of this wrong, but I really listened to it more than once, and that's how I walked away with it. So that is your framework for a deal, that there will be some products that may not get the 10% tariff, but few and far between, and he's not going to make a lot of exceptions. He's staying with the 10% tariff because he needs that for his tax bill. We understand that, and he feels that the U.S. is owed that. You've got to pay to play in the United States, but it was more than fair from everything I'm seeing, and certainly in listening to the Prime Minister who got on the phone. He wasn't there in the room. Very excited about the deal, very excited to do it. Of course, the UK should. They just signed a huge deal, a $5 billion deal with India. So they've wrapped up two big deals. This guy is really working hard. I give him a lot of credit, and those are good pieces of news. So what the stock market did is it rallied on all that, as it should. It's euphoria. And I have constantly said in my newsletter, the first deal will get the market rallying, and it did. The problem you have is it's the first of 174 more to go. The others will be progressively harder. And while we are going to meet with China, and the president today dangled, well, yes, we might lower some tariffs to get things done with them. It's not going to be easy. China today wrapped its arm around Russia. They are going to stand united against the United States. And for Russia, the president will reward Putin very shortly. I predict this, with more sanctions coming on him. He's getting nowhere in this Ukrainian war with them. And Putin's, in his mind, you know how the president thinks, he's probably got to be brought down a peg. And I expect that's going to be the case that we see. The gold got hit as the dollar rallied. You can see it went up 100 points. It was interesting that the energies rallied on that news because it means that maybe we don't slow economies down as much. I can accept that initial rally there. Bonds and notes fell on the news as I thought they would, because it means that, hey, the recession pressure for the moment comes off. What's going to happen, and I want you to appreciate that, is you're just weeks away from feeling the impact of the other tariffs that are on all the goods that are arriving everywhere from foreign lands. And as those show up, problems will come in. Who's going to price? How much do they do it? I saw Crocs today. How much are they willing to eat on the stuff that's made abroad? So prices are going up. That's an inflation story. It could slow the economy down, and there's more to come, because what you're going to have is a loss of labor in some areas. We're losing 30 to 40% of the ships that come into the ports on the West Coast from China. That has not been made up. Do we need as many truck drivers, factory workers? How does that ripple down all the way through? Got to think that out, because we knew there'd be that impact and we're about to feel it. So as euphoric as you might want to get in this market, I'm going to stick with what I said in my report that's off now our website. I hope you viewed it, because it's coming out. On a weekly chart, this is a bear market rally so far. Hasn't quite got up to the 18-week average. We'll see if it can. And for the week, you're still down 0.42 and you're already in the Friday trade. When you come over to the daily chart, we've come up, and I predicted to you we'd have resistance in this area right here, and that's pretty much what we're doing so far. If you look at what's coming on here, higher lows, higher highs on the chart over the 18-week average. So we've been in an uptrend since back here. The market is spending a lot of power since April 7th in getting up to this rally. I see massive resistance at the 58.40 to 61 level, and I've been on record that I don't think you're going for those highs anytime soon. So we'll see if I'm right. Where's the Bollinger Band? It's now getting much closer. All these numbers are coming together. Do you have to go up there? No. But if you do, that's the resistance zone. And what else? You have a bullish embedded reading. So until the red line closes under 79, this market probably gets bought on breaks until the pros dump it, and you'll see that probably as the market gets under a 79 and closes under a 79 reading. Until then, if you haven't taken my Bollinger Band course, you want to. I think you should. Go to iraepstein.com, and right there, look at the word courses. The Bollinger Band course is there. Teaches you how to work with the slow stochastic and these bands together, and key moving averages. I mean, I really tie it together, and I give you examples, and I show you what I see. And with the course, you get my morning videos if you haven't come in, my subscriber videos, and you get the spider videos for a couple weeks along with this charting software. So you're able to see how it all fits in for it. You have the same identical thing going on here with the embedded reading, but you don't have the swing line and uptrend. You've got a lower and low, higher high. But again, all these numbers came together. So you got the 100, the 200, and the Bollinger Band, pretty stiff resistance on rallies. The Dow, further away, still the embedded reading, still the April 7th low. Embedded reading in the Russell, coming up much further away, the resistance numbers on this market. We'll see if it can hold together better than the others. It has been, and remember, I started laughing at this a couple of days ago. I said, back here, I can't believe it. We have a real buy signal in the Russell, and it has stayed in place. So I congratulate it. It's one of the few times. Now, the DAX, in my opinion, I told you yesterday, let's get over here. The market started pointing down. You had a little bounce today. If you take out the lows of Tuesday, actually Wednesday, let's go to that, the lows of Wednesday, problems in the market, this number will start gaining more momentum to the downside. So if it's going to make an attack at the Bollinger Band, which it doesn't have to after this huge of a rally, but if it does, it's got to do it without, I think, taking out another low and closing lower, both parts of it, but that would be a problem. In the 10-year notes, again, you make a deal, is that bullish or bearish? I think that it says, oh, that's good for the economy, so why are we talking recession? Boom. That's the thinking that goes on. Chart-wise, when you took that out, you opened the door to go to 110, 11 and a half or so. That's about all. You're oversold. You're caught in sideways action here. I think you're spinning your wheels right. Excuse me there. In the 2-year note, you want to see how whipsawed you get? Up to the upper band, down to the lower band in a week and a half. I mean, no follow-through so far. anywhere, and I don't expect that you're going to get a lot. You're oversold. But let's assume I'm wrong. Well, then the market has the 103.09